You see that? It's beautiful. But what's the challenge as far as we're concerned with that trade? Well, the challenge is that we've seen the blue zone starting to drag lower. The challenge is the red zone above us is actually flattened out. The challenge is this could actually be fair value, not a discount. If I was to look at this, my first gut feel is that actually this is a discount price here. My gut feel is that's the discount. My gut feel is that that's fair value and this is a current top edge here. I'd be very concerned. But is this the kind of trade that they're showing? If you've been in the webinars, if you've seen their webinars, this is exactly the trade they're showing. They're showing the profile from the swing low to the swing high. They're showing the value area low, and they're looking for the discount against the value area, which is not a which is currently now a static trade area. Well, we know our value area isn't static. And what happens to this beautiful buy trade here? So you see them getting what they would call the on their indicator, what they would call an iceberg order here at 95, and they'd be buying a lot of business off the 95s here, correct? So their indicator's pinging off the charts here for an iceberg order. And all the guys that are buying that are saying this is the best platform I've ever seen, ever. And they're all getting in at 95s. And what happened? The price collapsed through the level down to the 90s. So that's exactly how these things, that's the problem with these types of ideas, isn't it? There's nothing wrong with the storyline. It's just that it changed in the movement of the chart. It changed in the movement of a chart. We can see the underlying, how it develops in here, and we can recognize it that probably fair value is over here. And therefore, you know, if that's fair value there, why are you buying above fair value at this stage? And maybe the opportunity is to buy the discount to fair value down here, right? So this would have been the perfect trade for, as far as I'm concerned, the perfect trade for that neutral auction phase. And from that long trade, how did it do? Well, it did pretty good, back to what I would have seen as probably fair value at that stage. And then all these guys that are looking at this as a new platform would now be looking at this sell phase, yes or no? So when you see that sell phase there, you say, okay, well, there's obviously the unfair high here. So we're going to look at that. Now, there's nothing, as I said, wrong with this. We do it ourselves. That's the toxic seller there. So you're going to be looking at that saying, well, if I get the right order flow from my new shiny platform, I'm going to sell this price at 92s. And what happens at 92s? So you're coming up to 92s, you're looking to sell it at 92s, and it trades 96s, stopped out. So obviously you get stopped out, you go again perhaps, and you get stopped out again. And then you go again and you get stopped out again. So you're stopped out 3 times. Are you going to go a 4th time? Are you going to go a 5th time? Are you going to go a 6th time? How did we know that that would probably be problematic? Well, because we're actually moving into a neutral zone at the bottom, aren't we? And as we moved into a neutral zone at the bottom, we'd probably look at that and say, well, realistically, if that's a neutral zone, and this is, for example, fair value, perhaps this is fair value, then, you know, I wouldn't expect to then see anything evolving until perhaps an unfair high, which would then put me into a sell trade, possibly against this guy up here, right? This would seem reasonable because that was the last time we saw that red zone. So to me, it would seem reasonable that that liquidity there was possibly an unfair high price. And you could see that getting an unfair high into that sell would have made a wee bit of sense, right? Not that sell, that sell. Not that volume, this high price. So the technique is flawed. It's a good start, but it's flawed because it doesn't take into account the changing circumstance. Adding order flow, of course, improves the technique significantly because you can see whether the buyers are getting absorbed or not. But it's the buyers here did get absorbed and reversed, and that would have got you into a short, and the buyers did get absorbed and reversed. But you'd have lost money on both of those two trades. So in other words, the last 3 or 4 trades you've taken against these iceberg orders here, lost money. Against these sell orders here, lost money. Does it mean the software's wrong? Does it mean that the logic is wrong? No, it just means that it's still technically incomplete. Still technically incomplete, isn't it? It doesn't have the entirety of what's happening in the world of trading. And you've got to build that into your thoughts. You've got to think about the market in a better way in terms of the auction process, not just because of a static profile from the background, but from a developing profile in the foreground. So when I see this static profile, it's a great start, but it's only the start, not the finish. And I think Fabio could learn a lot by going back and revisiting that concept to some degree and recognizing that whilst this is a great starting point, when we arrive into this area, is it really the story you want to be selling into or buying from? And all the guys that go fawning over this as a concept, as I said, it's a great start. But it's not the end game. All of these trades would have been losing trades in these areas. And obviously we can continue to do the same process looking at profiles, and you can look at the fixed range narrative. And you can come off the low price and go to the high price, and you can start looking at that and saying, right, well, I know where the low volume node is. And as you go into the low volume node here, you can say, right, well, with the low volume node, and then there's a bit of volume here. So perhaps that's the next trade opportunity there. And on this occasion, you just miss out. But perhaps, again, there was a reason why you missed out. And we can see what the reason was. Look at the arrival of actual orders, real orders here. So maybe you're resting down at 89s, but you've got to be able to respond to the fact that at 90.5, a massive buyer showed up. You see that massive volume in that pin zone? And if you look at that massive buyer in that pin zone, you're also recognizing that this was an asymmetrical drag through the profile phase. In other words, this was a what? A skewed market. So inside that skewed market, is this not like the golden trade right here at 90? Is that not the trade you've all been wanting to see? The golden trade of the golden trade world? Of course it is. So when you're looking at that massive opportunity to buy at higher prices, you might think that that's the unfair low, but if the guys say that this is the unfair low, are you going to disregard them altogether? These guys have hundreds of contracts in play here. Are you going to just disregard that as because you've got a volume area that shows you that this is the unfair low? Or are you just going to take your shot at 90, 91s, 92s? And obviously from that 90, 91, 92, you've had a very, very nice buy-side rip. You've gone bid at 91, 92, you're trading 97s, you're making 6 points. Is it a good starting point? Absolutely. Are they absolutely correct about it being a good starting point? Sure, but should they be telling you that it's a finishing point? No, because it'll get run out just as often as it doesn't get run out. It's not an edge, it's just an old-fashioned edge. It's an edge that's came from the past, and it may still be available in the future. It may not. What you've got to have is the ability to recognize what is and what is not likely to take place in real time. In real time. And this is what we start recognizing when we think about these ideas, these concepts, that the concepts are good. And again, it comes down to the application of the concept. It comes down to the ability to continue to apply what you know, but it's also about being able to change to the current circumstance. It's ability to recognize that somebody's decided different from what you think is going to happen. And from that, you've been able to then take a shot at 92s, which has resulted in a 4.5 point profit, which is a great profit for you. You're in great shape. You potentially at this stage, you've got to stop now at break evens. Your defensive stop, which could have been sitting away down at 87s, is now at break evens. You're waiting to see if you hit target 1 at 98s. And if things change, you're able to walk away from that as it develops into a different story. You can change your opinion. You can change your narrative. And that's the secret to success in trading, is the ability to change your narrative. Regardless of what historical profiles were showing, it's the ability to recognize on the right-hand side that something did indeed change. And if you can spot it, you can trade it, guys. Welcome in. It's just after 1 o'clock. I hope you're good this morning. Ready to rock and roll. That was a bit of a chunky bit of volume coming in the oil, wasn't it? Look at that. Look at that absorption of all of those buy orders, and it dropped hard into a big bottom edge there. So that was a very, very active bit of a. I mean, it's not huge, but it's reasonable. It's a 40-tick range there in literally 60 seconds. 40-tick range in 60 seconds. Kind of knew it was going to happen because your red zones were lower than the blue zones, and the blue zones were lower than the previous blue zones all the way through that process pretty much. And, you were always looking for that sell.